welcome. Good afternoon. This is Mary Ellen McGonagle with the MEM Edge Show. This is the show where we put you in front of where the action is in the broader markets. And I have to say, this is a happy Friday. We'll go ahead and take a look at the recovery, seeming recovery within the broader markets. And really, it's been quite a volatile week. But at the end of the day, there have been some tremendous setups that are presented, and I'm going to go ahead and review with you how you can uncover those candidates that are really setting up. So let's take a look at what we are going to be covering today. The first, as usual, we are going to review where the current markets are. Have they recovered? Are we back in a bullish phase or not? And then from there, we are going to take a look at what I call turnaround candidates for the week. There are a number of areas that did sell off quite a bit more, certainly, than the broader markets. And some of those stocks are potentially turning. So we'll get a flavor and a feel for whether they're ready for prime time or not. And then another area that we are going to look at are stocks that were able to outperform the markets this week. And the reality is, when you are looking for leadership names, you do want to look for those relative outperformers, but that standard becomes even more impactful during a period of uncertainty in the markets. When the markets pull back, those names that are able to withstand that downward pressure, those are the names that are really going to excel once those broader market pressures lift. So we're going to take a look at some of those setups there, and more importantly, how you can screen and uncover them for yourself. And then also, there are a handful of stocks due to report. We're not into earnings season quite yet. The quarter did just end last week, and earnings season is going to start rather robustly about mid-month. That's when we're going to start to see those big bank stocks come in and report. But doesn't mean there aren't still some names that are going to trickle in next week. We're going to take a look at a couple of them because they are potentially interesting, and one of those stocks could be impactful. So let's go ahead and get started. It's going to take us over to a view of that broader market. And what we're looking at here is the S&P 500 large cap index. And this is a daily price chart. I'm going to see if I can blow this up so we can get a little bit larger, better view. And each bar, of course, on this chart represents 1 day of trading activity. And for those of you new to the show, I'll quickly explain some of these indicators that I have overlaid on top of this price chart. First, as we enter and take a look at the actual price action, I have what are called simple moving averages. And quite simply, they're smoothed out versions of a certain percent of the markets. So if we look at this green line, that is your 10-day simple moving average. The red is your 50, and then the blue, your 200-day simple moving average. The relevance here is high because you want, ideally, these indexes to, at the very least, be trading above this red 50-day simple moving average. From my work, that's the line in the sand, in the sense that a break below that can clearly lead to more downside. And on the recovery side, we want to see a break back above that 50-day simple moving average red line. I'm taking us back to that June. And my apologies for any audio difficulties that we may have experienced, but we are back on track here. And as mentioned, taking a look here at the S&P 500. And ideally, what I want to present to you here is that recovery downtrend reversal. This is what you want to be on the prowl for. Of course, in May, we did have a correction in the markets, defined as the markets down at least 10%. So let's go ahead and review what that recovery process looked like. We can see the index broke up first above this shorter term 10-day simple moving average. Once it breaks up above this 50-day, then you can have even more conviction. This 50-day really is viewed very widely as a divider as far as the markets being in an uptrend or a downtrend. And then when you can marry it with these other technical indicators and signals that I have here. So up on the top, we have this RSI that is not only trending upward back here in June, but it broke up above this dashed net neutral. Let's go ahead down to the bottom, and I do have the moving average convergence divergence. I'm going to go ahead and change that to the stochastics. I want to show you how you can do that yourself. You want to go down to the indicators, go ahead and put in full stochastics and update. That's going to go ahead and modify and put down here indicators that are useful to you. You can see the wide selection there. So again, taking us back to this June recovery, we want these stochastics. This is another momentum indicator, not only trending upward, but breaking up above this dashed net neutral. Take a look. It is in conjunction with the break back above these simple moving averages and in line with the RSI turning positive. So there's your downtrend reversal in the broader markets back in June as we recovered from that May correction. Let's take a look at where we are now. And we can also, of course, take a look at the reversal out of this very difficult August period in the markets. So we can see again how volatile it really was this week. We had these swift downdrafts, and then of course the last 2 days, a little tepid yesterday, but certainly with more oomph and power today. We're a little light on the volume, but more importantly, let's take a look at the position of the S&P 500 relative to these simple moving averages. And as indicated here, we can see that the index has closed the week above that 50-day simple moving average. Now that is very constructive. However, let's take a look at our outlying other significant indicators. The first is, of course, this RSI up here. And we can see it's trending upward in a very positive fashion, but we're not quite up above that 50. We are a hair away from being up above. Taking a look here at the stochastics, and another key, actually one of the key ways to use stochastics is identifying overbought and oversold positions when it breaks down below this 20, as it did here earlier in the week. The markets in this case, you can use this for stocks as well. They did get oversold, so the stochastics relevant, certainly subsequent to the last 2 days' actions, they're trending upward, but we're not up above this 50 yet. So that would be ideal. That is something that we would want to see in conjunction with this bullish price action. So I will say to you that based on what we are seeing, I am cautiously very optimistic. Ideally, a break above this shorter term green line, this 10-day simple moving average, in conjunction with the RSI going up above 50 and the stochastics up above 50, that would be your double green light, as I like to say, and a real clear signal that this downtrend has been reversed. But we certainly are well on our way, and using that information, some of the setups that I am going to be sharing with you, we could very well be a day away from the ultra positive signal in the broader market. So now let's go ahead and take a moment and drill down. What I am going to do is share with you these 12 thumbnail charts. These are 2-month charts. This is called the candle glance view. You can get this from StockCharts.com, their initial first page. And what I've done is highlighted and input the various indices in the broader markets. And what we can see here is I've also overlaid what is called that RSI, that relative strength indicator. And then I've sorted it in descending order. And quite simply, that is going to share with you and show you the relative strength versus the weakness. So up there on that upper left quartile, those are your stronger areas of the market. And down here in the lower right, these are your weaker areas. So let's take a look at some of these various indicators and indexes that we have. This first one that is showing the most strength, that is the US dollar. UUP is the ticker symbol, and you do want to pay attention to this. We are going into earnings season. A strong dollar is going to impact the earnings with some of these stocks, the multinational larger companies that are due to release coming toward the middle end of this month. But within the various indices, we can see the strongest sub-industry group in the markets currently has been semiconductor stocks, and SOXX is the ticker. Let's take a look because it does bear having a closer look at. Semiconductor stocks are a very large component of technology, but more importantly, strength within semiconductor stocks is really quite healthy for the markets. These are companies that are very innovative. They do supply semiconductor chips. So if there is demand for those chips, that indicates a relatively healthy economy. And more importantly, within chips is these semiconductor chips is the fact that they generally are very sensitive to China trade war. Many of them derive income from Chinese companies, so they are going to be a bit more sensitive. However, I will tell you there is a whole subset, a whole subsector of semiconductor chip stocks that are resilient against the Chinese trade war fears. There are supply dynamics, demand and supply dynamics in place that are really buffering and holding up these stocks. That is the type of thing that I cover with my MEM Edge biweekly report. You can go to meminvestmentresearch.com and take a look at that. I have a 4-week trial at a very nominal fee, so I would urge you to do that because those semiconductor stocks that I've identified were in that grouping of withstanding the market pressures this week, and they are poised to trade higher. But let's take a look at this index. We can see that it pulled back, certainly in line this week with the broader markets, found support at this upward trending 50-day simple moving average. And unlike the broader markets, we can see the RSI is positive, and it has broken up not only above that 50, but it's also now up above that 10-day. So by and large, semiconductors are looking quite positive. So quickly, we can take a look at some of these other subgroupings. Gold, of course, a hedge against the volatility that we saw last week, holding in well. Nice to see the volatility index. That's the VIX. That is the index that is a fear index is also what it's known. And it closed at 17, and that is a good number. Anything above that 17 is indicating high levels of fear and more downside potential within the broader markets. Here's quickly what I want to do because I will have to go to break in a minute here, but I want to key in on these weaker industries here. Take a look. Biotech stocks and transportations really were thrown out with the bathwater in this sell-off, and the Russell 2000. The reason I'm pointing these out is because I mentioned to you in the beginning the concept of being able to identify turnaround candidates, ideally those stocks that sold off much more than the broader markets, but they could very well be reversing. We can see this is 2 days of action. They may have hit a bottom. So transports, biotechs, small caps. We're going to go ahead and drill down, help you uncover potential turnaround candidates. And for now, I will take a moment. We are going to take a quick break. When we get back, I'm going to share with you where the sector are positioned, those that are relatively have been outperforming, those that have been a bit weaker. And again, we are going to be on the prowl within those sectors, within these subgroups for setups for next week. So I will be back in just a moment. And welcome back. Here we are. This is that candle glance view that we were just looking at with those sub-industry groupings. But now what we are viewing is a look at the 11 sectors within the S&P 500. And again, that RSI indicator has been overlaid, and also it is in descending order. So again, strength to weakness. We want to ideally position yourself so that you are in those stronger groups, but also with an eye toward looking for turnaround candidates in some of these really depressed down and out sectors that really got hit hard last week. There were a couple of them that were down at one point almost 5%, and some of them have recovered, others not so much. So looking at the strength, really quite interestingly, we can see utilities, staples, and real estate up here in the forefront. And for those of you that follow the markets closely, you'll know that these are defensive areas of the market. I find it very, very interesting that each of these have bounced off of support and are up here now in positive territory, despite the fact that the broader markets may have recovered. There still is a highly defensive feel to the markets, and that is not a bad thing. We can get into that in just a minute. Outside of defensive areas, technology had a nice bounce this week, and that is, again, what you want to see. We talked about semiconductors. The technology sector is the largest component within that S&P 500. If we can see strength in that sector, that really is going to bode well for the broader markets. And let's go ahead down to some of these weaker areas that really got hit. And I've been, as always, I do screening throughout the week. Preparing for the show, I've done a lot in the way of screening, and I will tell you, most of these energy, this is the hardest hit area. Last week, a lot of these economically sensitive areas were hit the hardest. We can see industrials and so forth. Energy will not take time. It is not quite ready for prime time yet. I will argue that financials also got very hard hit. Let's take a quick look at that grouping. Earlier in the week, you can see these big, huge drops. However, financials were one of the better performers today. So this would be much more interesting to me. It now has broken back up above that 50-day simple moving average. So that would be a much more vibrant fishing pond, if you will. So let's go ahead and drill down to some of these areas. And I'm going to share with you ways that you can potentially uncover possible candidates, and again, names that are setting up really quite nicely. What I'm going to do is start by looking at this sector summary view. Again, you can get this from the first page of StockCharts.com. I'm looking at a 1-week view. So these are the percent changes for the week. And we can see technology really came in as the strongest. It was up about 1.1% for the week. So this is this first area. What I'm going to be on the prowl for here are relative outperformers, names that are setting up. So let's go ahead into technology sector. We are now given a view of those sub-industry groups within technology. So computer hardware was a relative outperformer because we can see that the this particular industry group, sub-industry group, was up almost 3%, and that's compared to the broader markets that were down about 1/3%. So clear-cut outperformer. Let's go ahead and drill down into the individual stocks. And from here, I'm going to go ahead and sort it by the StockCharts technical rating. And these higher ranked numbers, higher ranked companies are going to be your better performers. And we can see Roku is up here in the forefront, but I'm going to share with you a quick way to assess whether that is worthy of drilling down. So by hovering over that ticker symbol, it's going to provide me with a view. And I will tell you, Roku sold off more than the broader markets. It is, well, let's go ahead, because I think by taking a look at the chart, this will make more sense to you. We can see that it really fell out of bed. This has everything to do with competition, a lot of competition coming in, a lot of volume on this downside as investors sold. We talked about a break below the 50 being very negative. So we can see that Roku has leveled off this week. Take a look at this performance during the first 4 days of the week, and we noticed in the S&P 500 how sharp the sell-off was. Roku was defying that market downtrend, so that is showing relative outperformance. It has broken up above this 10-day simple moving average, so kind of interesting, because the next possible area of resistance is this red 50-day simple moving average. So in your mind, you might think that we could rally from this 106 level up to the 127 level, and that would be a very healthy, nice 15-20% advance. However, let's take a look at these other indicators. The RSI is still below 50 and kind of trending downward. I do have the moving average convergence divergence, but this can be really helpful in identifying turnarounds. And here's why. There are times when this black line will cross up through the red. That's called a moving average, a MACD, the black line going up through the red, and that can often be an early signal. You ideally want the MACD to be above that 0 as well to give you even more conviction. But I can take us back to, with Roku, to this early 19 period. We did have that black line up through the red. As the price broke up above this shorter term, in line with the RSI trending upwards. So this was an early signal that you could use, and then eventually it did go up above 0. But again, this early signal for the turnarounds can be used when you can marry it with other signals that are flashing positively. However, let me get to my point here. I will tell you, Roku at this point is not ready. It does not appear ripe. With that in mind, let's go ahead and back and look at some names that do look interesting and could be potential candidates. We're going to go ahead and sort it by this scooter rating. Again, I'm going to take us down, and we can now take a look at other potential candidates. SYNA. This is another name that did show relative outperformance, certainly during this week and even before. Now, this is a much more attractive chart from my work. Let's go ahead and blow this chart up. And again, I talked to you about that concept, those stocks that are able to withstand broader market pressures. When the pressures are off, they will outperform. This stock was up 4% today. I'm going to take a minute here and annotate it so that I can share with you some of the dynamics that make this chart very attractive. We can see SYNA, Synaptics. The stock, this is what I'm drawing here, is a saucer type base, and the stock broke out of that base today on very good volume. Let's go ahead, and here's that breakout. It broke to new highs, actually near-term highs. And we can see that your volume was there. It was up there above average volume. Also, your RSI in very good standing, showing relative outperformance, and your moving average convergence divergence also in positive territory. So I would argue that that is certainly a much better candidate than Roku. Let's go back, because we do have a couple of other areas that I want to cover with you so that I can help you prepare for next week's action in the markets. We talked about some of these other areas. We're back to that 1 week view in the sectors for the week. Let's take a look at the industrial sector. This was an area that really got hit super hard, down over 4% at one point. Let's take a look at some of these down and out areas. Again, we are on the prowl for stocks that could potentially be turning. I'm going to go ahead and sort it by scooter again. And from here, what we can do is go ahead and take a look at one of the candidates within or among here. And again, using this thumbnail view can be really quite helpful. But let's go ahead and take a look at KSU, and I'll share with you again how you can utilize this concept. The stock did find support very positively at this upward trending 50-day, but your RSI is not positive, nor is this MACD, so not an ideal area. I did want to take just a minute and take a look at some of the stronger areas, certainly not within this, but what I did want to do is share with you how to uncover candidates. We talked about financials at one point being really down and out. However, a number of areas within financials did outperform the markets, 1% versus the S&P 500 that was down about 1/3%. So we're looking at what are called financial administrative stocks. I'm going to sort this buy that scooter rating. And again, we can take a look at a potential candidate here by hovering over these ticker symbols. And of these names, EEFT could be a potentially promising candidate, because take a look at this. This is a stock that has been in a downtrend. It's finding support at this upward trending 200-day simple moving average. Two things that need to occur, and we could very well be a day away from that happening. Number one is we want to see the price break up above that 50-day simple moving average. And what that is going to do is it will pull up that 10-day so that we can have that golden cross type of phenom. We also want the RSI to trade up above net neutral. And these two characteristics would set this stock up for a nice continued formation of the right side of the base. I did want to take a minute and look, because I can come back to this and share with you some of those names that are reporting next week, their earnings, so that you can be on the prowl for potential to see how they will do potentially. INFY is Infosys, and this is a dominant player within technology. And what I wanted to point out to you is at this juncture, the stock sold off rather sharply. It did hold up well this week. Now, given this sell-off from this peak in price, among analysts, the stock would be considered relatively cheap. The multiple now has contracted, so that would make it cheap. I also wanted to point out to you, if we go back to their most recent release of earnings back here in July, take a look at this huge gap up on big volume. The company came out with earnings that were well above estimates. You'd like to see that kind of phenom. We can go back here, historically, another gap up on earnings. So the company has a history of reporting above estimates. That's another good characteristic to keep in mind. And what I did also want to point out to you, or it's not evident here, but analysts are raising earnings estimate going into earnings. Now, I will tell you, I am not a fan of trading into earnings. This more would be a name that you could keep an eye out for. They are due to report next week, and they could surprise. And given the relative PE relative to where it was, it could be a very interesting stock to pay attention to. A couple of other names, I have probably just a minute here that I wanted to share with you, because these, again, I talked to you about doing screening throughout the week. I have a list of top candidates that I want to be on the prowl for their potential turnaround. And this is a lot of the work that I do with my MEM Edge report. I have a watch list of high performing, and they're high performing because they're fundamentally they're strong. There's a reason they're outperforming. So here's Shake Shack, SHAK, pulled back to this 50-day simple moving average. I'd ideally want to see it break up above the 10-day in combination with the positive RSI and a positive MACD. One other name that we can take a look at that is on my watch list is Koopa Holdings, or Koopa Software, COUP. This is a stock that really has done well relative to a sell-off among many software stocks. Take a look at this break up above these simple moving averages. RSI and MACD are both positive. So I would certainly keep this stock on your watch list. I will leave it at that. For those of you trading, happy trading.
I think StockCharts is a fantastic platform, especially the fact that it's web-based. So on the car on the way here from the airport, I was bringing up my cell phone and I was looking up really beautiful charts to get a read on what happened. I looked at the market summary page, and then I'm drilling into individual charts.
StockCharts is unique in that you've got all of the perspectives of many of the technicians.
A sincere desire to really help educate investors, and that's really critical.
StockCharts is unique because we combine the commentary, the education, as well as the tools in which you need in order to analyze the markets.